Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm going to go over oil and natural gas, some of the companies that I own and their performance over the past year. The channel started 1 year ago, so I wanted to show you kind of what this looks like. And I'll give you the performance of a lot of the companies that I'm participating in about roughly over that year. So let's dive in. We've got the performance right behind me, and I'll give you my opinion, financial opinion on all this. So in the upper left, we've got some of my companies that I really like. We've got SM Energy, ticker symbol SM, Centennial Resource Development, CDEV, Crew Energy, CWEGF, Tellurian, TELL, and Callon Petroleum, which is CPE. As you notice, these things have been supercharged over the past year. Oil has performed exceptionally well. We had a ratio on oil of over 50 barrels to 1 ounce of gold at the beginning of 2020 on this 1 year chart. What that means is that oil was incredibly cheap in relationship to gold. It was a complete buy at that point. We also had the chart patterns bottoming out and ready to move higher at roughly a year ago. And that's when I started the channel. It was in August 31st or September 1st, roughly. So it's been about a year. And these are the returns, and these are some of the companies that we were talking about on the channel at the beginning. And if you've been on the channel at the very beginning, you probably have seen me talk about some of these companies. CPE was brought in a little bit later, but the rest were up there. We also had another one, QEP, that I was very positive on, which was going to be another one that I think was going to be a very close runner with SM, Centennial, CDEV, and CPE. But these are the returns, massive returns over the past year. I don't expect that to continue going forward. I do think they're going to potentially be a little bit lower than this, but I do think that they could still potentially return incredibly well. But I don't know if we're going to get a 16, 17, 18 bagger from the spots that we are at today. But we'll see. We'll see what happens. I do think oil can compress against gold quite dramatically, and gold go up at the same time as this bull market progresses. Here are some of the energy service companies and some of the explorations that I own that I had to group together because this is the most you can put together. Tetra Technologies is one that I jumped into. Helix Energy Solutions is one that I recently purchased. It's been lagging. It hasn't broken out of its big trend yet. So that was one that I added into. So this is TTI for Tetra Technologies. HLX is Helix. I also own Transocean. I bought in Transocean. That's done very well. RIG is the ticker symbol. We've got Grand Tier Energy, GTE, and Contango Oil and Gas, MCF. And this is the 1 year returns on those. And I still think that all these can perform quite dramatically going forward. Looking at some of these other ones that I own, these are some of the Canadian oil and gas and some other ones that I recently had purchased into more recently. So we've got Birchcliff Energy, BIREF, Advantage Energy, it's AAVVF, Northern Oil and Gas, NOG or NOG, and then we got Crescent Point Energy, which is CPG. And if looking at these, they've all done very well over the past year, pretty steady performers, and I do think that a lot of these are still undervalued and could perform very well going forward. I bought Northern Oil and Gas recently on this pullback here. That's where I bought it, in this range there. I also bought Crescent Point Energy, and the reasoning I'm buying some of these is that they're just breaking out of their very large patterns. So I think there's a lot of upside potential in it. And some of the natural gas ones that I've got on the right-hand side here, I own Sandridge Energy, Southwest, that's SD, ticker symbol, Southwestern Energy, SWN, Antero Resources, AR, Comstock Resources, CRK, and Range Resources, RRC. I bought most of these in the beginning. I bought Sandridge a little bit later. I also bought Comstock a little bit later, which was more in this time frame in here for Sandridge and Comstock. And I look at stuff when I look at things, guys. I look at things and I'm patient. I buy things when they're down. I don't chase. So when you see things that are up, we'll say 50%, like it just recently ran 50% or greater, I'm probably not going to buy it. I want things to come down and form a pattern, and then I buy it at the bottom of the pattern, or I buy it at a support level. I do not chase. So my returns are usually better when you're not chasing things, and you're buying it off of pulling back to, say, a trend line, a retest, buying the retest. So we've got a big pattern. It breaks the pattern. It does a retest. That's where I buy it. And if you watch the technical analysis videos that I have, that I post all the time, you can see where I'm buying things. I'll make comments. These are not, it's not advice. It's just my financial opinion on where I am buying things, and I will disclose when I'm buying things. I know a lot of people want me to disclose when I'm buying things. So these are the returns over the past year. I still think oil is cheap. We're at like a 22 to 1, so 22 barrels to 1 ounce gold ratio. That can still compress quite a bit further to a range of maybe 1 to 3 or 1 to 5 or 1 to 8. Somewhere in that range is a bottom, we'll say is a bottom in the ratio, is a top in the oil market. It's somewhere in that range. And it could go even more than that because we've really screwed up the energy area. We've had a crisis in natural gas, which spilled over to coal, which spills over to oil. And I think it's going to spill over to uranium as well at some point. When electricity gets a lot more expensive, I think people are going to flip back on their nuclear power plants if they shut them off. Places maybe like California, places like Europe, wherever it is, I think they'll start flipping them back on. I think Japan's flipping theirs back on. So I think that the energy sector in general is a really good spot to be. I think we're undergoing a huge transformational shift in how we use, produce, consume electricity. And I know that they want to go to this renewable world. I am a little bit dumbfounded on why they even call it renewable. The sun itself is a renewable source, but everything that we gather with it is not renewable. It is going to end up in landfills. So I'm a little perplexed on how we can name something renewable when the very thing that gathers the energy is not renewable. It is, I guess, replaceable. So we'll call them the replaceable energy because we have to continually replace it over time, and it's going to strain our environment quite dramatically from all the mining of these materials. And we have to dramatically ramp up our mineral production. And I don't think we have the minerals in the ground. Well, I should say, I don't think we have the minerals at the flow rates that we can flow as much that they want to consume. So the supply flow cannot meet the demand for some of these materials. I'm going to guess nickel, lithium, copper. There's cobalt. There's more than just that. And then we've got the rare earth metals as well. These are all spots that I think are good investments. All those that I just named off right there on top of the energy sector. So I think energy is the most widely used, widespread commodity. It is the basis of wealth. And that basis that backs the wealth, that creates wealth, and energy in itself is wealth, is going to disrupt, we'll call it, companies and currencies and all this stuff when we hit shortages of energy, or if we hit shortages. If and when, however you want to say it. It could be an if, but there could also be a when at some point. When do we hit shortages of this? It has not been demonstrated that we can store electricity in batteries or hydrogen yet on a large scale. And it also has not been demonstrated that that renewables can sustain themselves over many, many years, where renewables build more renewables and renewables can do all the mining and all these other things for everything. The energy return on investment could be too low to sustain a complex society that we have. And we are also, with our fossil fuels, declining in energy return on investment as well. So it's going to be interesting and going forward on energy costs, energy return on investment. It's going to go, what I think, to a higher energy, we'll call it higher energy costs, and they're going to make up more of the economy because the costs and difficulty to produce energy is going to go up with time, maybe not down. And again, that's just an opinion. We'll see if that actually plays out that way. But that's my opinion. I think this area is probably one of the best areas for investment over the next 5 years, 10 years, however long this commodity bull market lasts. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.